Risk is like fire. If controlled, it will help you. If uncontrolled, it will rise up and destroy you.
Florence, what are the main risk management priorities for 2016?
Risk function has to cope with the evolution of newer types of risk. Technology has been driving change at a rapid rate, bringing opportunities and new types of risk technology. Banks are being asked to be more open, digital, and also customer focused. But digitalization of services means data and cyber security. And as all banks are at risk, because cybercrime and a data breach may happen everywhere, so they must have a crisis management plan in place. And it's important to know in advance what to do. New risk means also new regulations. And regulation tsunami is not over yet. Banks need to prepare for regulatory changes and plan for how they will be implemented. To sum up, the main changes that keep me awake at night are technology risk, cyber and data security, regulatory risk, and crisis management.
Well then, with all these changes, the Chief Risk Officer has a very important role, of course. So how would you describe what it is they do?
The role has a short history, coming into its own in two last decades with Basel Accord. The financial crisis has put risk management at the top of the corporate agenda, and the Chief Risk Officer came out of the shadows. In Switzerland, in 2016, this year, FINMA has reviewed its corporate governance requirements for banks. And for large banks, the governing bodies will appoint an audit committee, a risk committee, and will create the role of the independent Chief Risk Officer. For larger banks, the Chief Risk Officer must be a member of the Executive Committee. But today, the Chief Risk Officer reports to the CEO and has a direct relationship with the board. So he's now at the strategy table. He participates at core decision-making forums and challenges the first line of defense. The Chief Risk Officer must be analytical, but he must combine this with strategic leadership and communication skills. As the role continues to evolve, I may expect that he will become a generator of innovation.
Okay, well lastly then, how would you describe your company's risk management culture?
REYL Group's uniqueness is in its very DNA, reflecting an entrepreneurial, multicultural, multidisciplinary disposition. REYL Group has 5 key business areas and has expanded its geographical footprint outside Switzerland, in the UK, Malta, Luxembourg, Singapore, Dubai, and the United States. Risk is at the heart of our business, and that's the reason why we have a risk-aware entrepreneurship culture. The group has put in place an effective and strong risk culture, not only for compliance reasons, but also for its own good, in order to align the behavior of its employees with its strategies. Risk culture is not a single concept. It's something which is shared and also something internal. It encompasses values, belief, understanding, and knowledge of risk, about risk. REYL's risk culture is characterized by senior management support. I will say it's communication from the top down and the bottom up, and the status of the risk management. I report directly to the Group Executive Committee and the Audit Committee in order to be informed about regulatory changes and also good market practices. I co-founded last year a risk manager group and in Switzerland, and I'm also an affiliate member of the Institute of Risk Management. I will close my talk with a quote from Theodore Roosevelt. Risk is like fire. If controlled, it will help you. If uncontrolled, it will rise up and destroy you.
Florence, thank you so much for your time today.
Thank you, Sam.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.